All right, hey there. Good morning, everybody. It is just a few minutes after 11 a.m. Central Standard Time here on Friday, the 17th of December, 2021. And I'm Christopher Inks with Texas West Capital, and we are coming to you live from an overcast, little bit rainy, burning morning here in Texas. Good to always have you guys checking in. Excuse me. Man, got stuff going on with the markets here. We've got Bitcoin still continuing to pull back, right? Are you ready to sell yet? Have you sold already? Have you given up? Let's talk about the charts here before you do all that. The dollar, man, the dollar just keeps on pushing up there. It's rallying this morning here, getting ready to potentially break out and head even higher, which has been just awesome for, again, I told you guys I'd taken a USD CAD trade, and I even took a short this morning. What did I do here? Let me see. I shorted at 1.28353, which was about 10 pips off the high, and then went ahead and got out of that position there at 1.28188. So what was that, almost 20 pips first thing this morning here, in just about an hour and 20 minutes. Not too bad. We're rallying back up now, though, with it bouncing just above my target there. We'll see if we get a flat on it, though. It might be 3 down, 3 up, and then 5 more down to get a flat. But anyway, scalped a little bit there, got a little bit of change in the pocket. Bitcoin bouncing a bit as well this morning, so we'll talk about that. What else we got? We got stocks dropping off still. Interestingly, we track I track 3 of those indexes, stock indexes over there at TWC. I track the Nasdaq Composite, the S&P E-minis, and the Dow. And I believe it's the S&P E-minis that made a slightly new all-time high. The Dow and I believe the Nasdaq Composite remain below that. Now, that means one of two things. That means either it's foreshadowing continued, rally with those other indexes, or it could mean there's a non-confirmation on that new all-time high. And now, again, if you guys have been following me for any length of time, you know that I talk about at the end of bull cycles, we often get a non-confirmation on your indexes, when you're talking about that legacy market over there. And so you'll usually get, a few of the indexes making new all-time highs, and the rest of them not. They're not confirming the all-time highs. Why does that happen? Because each index is different, right? So you've got your Nasdaq, which is really heavy tech, and you've got your Dow, which is the opposite. It's much more broad-based. You've got your S&P kind of like the Nasdaq in that there's a lot of tech in it, but it does have, it's not as tech-centric. So you could see, your Nasdaq printing a new all-time high because a few of the, and I say just a few of the tech stocks are maybe doing really well, but the rest of the market, is just kind of just going to hell in a handbasket, right? And so that'll keep those other ones from doing that. The Russell looks like it topped out recently. We had the breakout to a little bit higher, and then it's come back from off that. So another another index there that printed a new all-time high and may have topped out there. So anyway, we'll look at all that, guys. We'll talk about some stuff. Who's here this morning? Keith, Marty, what's going on, guys? Hank checking in. You still in, let me see, Thailand? You still in Thailand, Hank? I think you are, right? TV Canal, what's up, man? Just in time checking in. Data, you're welcome, sir. Glad to have you checking in as always. Mark, hi there. ARM, who else is here? Blaze, what's up, man? Ali is here as well. And I just saw Diego check in there. I always know it's him because he's got that blue on that blue background that kills my eyes. I can't read it. So good to see y'all checking in. Hey, listen, man. Here's the thing. We just had again, if you know anything about us, we do this tier 3. Tier 3 is kind of the place to be, right? It's the everything. It's where you get access to all our content. And again, I keep telling you guys that I put out a stupid amount of content every month, more than you're going to be able to absorb, it just in that month. Because it's made for people that, depending on whatever your market is, maybe your crypto, maybe your stocks, maybe your Forex, maybe your metals and commodities, maybe there's other things you're looking at, and so that it just kind of gives you all that Forex, it gives you all those different markets to look at. But we also do, of course, those three weekly live streams. So Monday we talk about Wyckoff for an hour. Wednesdays, we talk about tips, tricks, and techniques, which are rules-based strategies usually. And then Thursdays, for an hour there on Wednesday, and then Thursdays for an hour, we'll talk about live stream for tier 3 there. Elliott Wave, again, taking you from that application or from that theory to that application. If you're new with us, make sure you guys are going through our Elliott Wave and Wyckoff basics and whatnot. And then that way, when you tune in to the live streams each week, it'll make a lot more sense. If you just try to go directly to the live streams, it's not going to make a whole lot of sense if you don't have a background in those things. So be sure to do the videos first and then come on over there. But anyway, guys, so we do that. And I taught another technique this week, as usual, on the Wednesdays there. And I got a great review by one of our members here. Let me kind of pull this over here for you, right? And so I just kind of copied and pasted this out of the Discord here. He says, what a great and stress-free strategy and it tells the strategy that we use this week. Sometimes I've struggled getting into the trend, and this seems to be a method that eliminates any anxiety, and you can just let it run. And he goes on to say, coupled with EW knowledge and support and resistance, this may end up being the core part of my trading strategy. He says, like you, I love Forex. Hopefully it's something I can employ on a regular basis. Again, guys, this is the thing we do every week. We do this week after week. Not that every strategy is for everybody, but I've learned so much over the last 25 years, so many different ways of trading, so many different strategies. And my goal here is to just to put that out to our members and let them decide which ones really work for them. The great thing about it is there's going to be more than one, and so it just becomes more tools in your trading tool belt, right? And so more ways to look at the particular chart and decide whether or not you want to enter. And you have rules-based strategies that tell you, listen, you're going to enter on this, and if it does this, then you're going to be out. Your stop loss goes here. If it continues up, it does that. You don't have to think about it. If you're new to trading, I think that's one of the best things about it, is that you don't have to have ever traded before. You'll be able to do that. One other thing I kind of want to get across to you guys here real quick. Let me copy this link here. So our friends at EWI have given you access to this right here. Talks about call buying, so options and whatnot. I'm telling you guys, man, if you're not taking advantage of this free stuff that I post on here from EWI, man, you're doing yourself a real disservice. Like us, they are a professional trading service, market forecasting and education service. They're not your fly-by-night guys that you guys are trying to to pay here online with crypto Twitter, because they promise you that they're going to tell you where those signals are to buy and sell and all this other nonsense, guys. And so when I post this stuff, you guys should be jumping in there on it. But anyway, that's a good thing there. Jump in there, get it. You can read it for free. I think it's going to have you sign up for their what they call their what is it called? Their Club EWI or something like that. And it's just you don't even need to have a credit card or anything to sign up. You just sign up with your name and email and whatever. And then not only do you get access to that, but you get access to other free stuff, and then they'll let you know when they have new free content coming out. And sometimes they give you guys discounts as well. So, man, oh man, I'm telling you, if you're looking for alpha, as you guys say, there's a few other places that do it as well as EWI and on a consistent basis. So, jump on there and do that, guys. Again, for me, they're one of the few services that I actually subscribe to. I have their monthly, their what is that? The financial forecast and Elliott Wave monthly or whatever. And so that just as because of what I do, that helps me give me an idea of what others who are significant, in our line of business are looking at and whatnot as well. See if there's anything I might have missed, different ways of looking at stuff, but a lot of great information in there, guys. Anyway, check it out there. Like I said, guys, you can join us here at howtotradetowin.com. We'd love to have you there. Christmas coming up here. Do you have a significant other who maybe, is into trading? Like I said, in 1 month, guys, you can increase your knowledge of trading so much in just 1 month with us. You don't have to stay. I'm not going to sit here and beg you to stay. If you do a month and you decide that's enough, or maybe that's all you have the money for or whatever, man, that's cool. That's all right. We'll be here if you decide you want to come back. But just make sure that if you join us, you are ready to learn, that you can soak up as much as possible, guys, because with all our videos and all our live streams, for Tier 3 members, those educational live streams I talked about over the last year and a half, I think we have just around 200, maybe a little bit more than 200 hours of video education. So significant amount, and you know what? You can DM me while you're there. You can ask questions in the channels. Always there to kind of help you guys out. It's not just, you join in, try to figure it out for yourself, all right? Besides that, we've got an amazing group of people over there, amazing group of members. And trust me, man, I say it, and maybe you're like, whatever, everybody says that. When you join, you'll find out. They are pretty freaking awesome, man. So anyway, let me see here. Daniel, what's up, buddy? Good to see you. Let's see here. I don't think that expanded flat makes a lot of sense, Canal. Again, in Elliott wave, generally the easiest count, the simplest count is the correct one, generally. And if you want to try and get a flat out of that big one, you got to start making concessions. You got to start looking at WXYs, with a truncated Y wave, rather than a 5 waves down, which is an easy count, and then trying to get 3 waves back up, is not so easy either. I don't think that happens. It could, but again, with Elliott wave, when you're starting to get really complex like that, it usually means that you're wrong, that you're trying to compensate. You're trying to force it. It's a square peg, and you're trying to force it into a round hole, basically. So we'll see what happens, but I don't think that's on the agenda right now. So we'll see what happens. We'll see. Let me see here. Hey, what's going on, Chris Baker? Good to see you checking in, man. Let me see here. Blaze said you watched the Socionomic seminar with Elliott Wave International the other day. Really good content. Man, I love socionomic theory. Again, guys, the cool thing, man, Prechter, who started and, owns Elliott Wave International, a great Elliott Wave technician. And he actually coined this whole idea of socionomic theory, which is something, if you guys have been watching for the last year, 2 years or whatever, it was something I came to later in my trading career. So I had already been trading since, 95? So that's 2005, 2015, 20 somewhat years. And what drew me so much to socionomic theory was the fact that what is taught in that is pretty much exactly the same thing that it took me 20 years to come to the conclusion of. So, if you're a new trader just starting out and whatnot, I'm telling you, man, it's a great way to go. It's worked really well for me. I don't imagine that it would work much, that it would work worse for you. But the whole idea is that the markets move based on on socionomics, on how the larger group of people feel. It's not the other way around. Traditionally, people teach you that the market moves because of how people, or the market moves and that makes people feel a certain way. It goes up, then people get happy. It goes down, people get sad. But what socionomic theory ends up teaching you is that no, people are already feeling that way. People are already feeling happy, and that's why the market goes up. People are already feeling down or concerned or worried or whatever, and that's why the market goes down. I'm not here to convince you, I guess, either way. Either you get it or you don't. This is your trading career we're talking about here, your trading life that we're talking about. So, you got to make the decisions that are best for you. But I think, especially when it comes to trading, if you don't think the way I just explained, then I think it's worth it for you to actually just take a look with an open mind. And then if you decide you don't, you don't. It is what it is. But I think that if you do enter with an open mind, I think you're going to find a lot of really relevant information there, and a lot of things that make you go, okay, yeah, that makes a lot of sense. Like I said, it took me 20 years figuring things out myself, which is a lot of lost money, to get to that point where that same thought there. So yeah, let's see here. What's going on, White R21? Good to see you there. Let's see here. Who else is here? Mark, what's up, man? There's a ton of info, isn't it? Hank likes the expanded flat. Again, I'm not going to keep going into that. We talked about that here on previous sessions of why I'm not a big fan of that flat. And it kind of pretty much the same thing I just mentioned a minute ago about simple counts versus fitting square pegs into round holes kind of thing. But again, nothing I said guarantees that it's not going to work out that way, or that the way I have it worked out. That's not the way trading works, guys. But until it gives me something more substantial to the downside, as I've already talked about before, there's no reason to really think that that's what's going on when you think in terms of simplicity. So that, you know, that's just my opinion right there. What is happening? What's up? Checking in from Charlotte. From Charlotte. I can't even speak. Charlotte, what's up, man? Leighton Stone Blue coming in from London, man. Always good to see you here. Ali, what's up, man? He says, is it smart to hold Forex positions over the weekend? What could be the negative sides of holding over the weekend? Negative sides could be something, some news event that happens from after the time it closes on Friday afternoon through the weekend that results in some sort of knee-jerk reaction. And so, you know, again, your positions aren't going to close out if they hit your stop losses or something while the market's closed. So what happens is when the market opens back up, wherever it opens back up, if that's below your stop loss, that's where it's going to lock you out. So, you know, I don't ever really advise, at least on, you know, shorter term positions, to hold them over the weekend. Again, it's always that that possibility that you get some kind of news event that happens during the weekend and then results in that. Same thing for stocks, guys. You know, you can have, heaven forbid, you know, some country gets attacked or some country goes to war or something, you know, during the weekend, right? You know, that would have a major, at least a knee-jerk reaction. Even there was discussions about it or fears about it or whatever over the weekend when you open up back at the beginning of the week. So, yeah, I would be careful with that kind of stuff, huh? How is the dollar rallying? What's up, MW? How's the dollar rallying? So much money printed? Because that isn't what it's all about. You can follow me at TX West Capital on Twitter. Sign up for the daily the market breakdown, which is my weekly newsletter. We haven't done it the last few weeks. I'm looking at changing the way that we do it, but it will come back out here probably after Christmas. But there are previous newsletters in there where they explain what's going on with the dollar, how dollar creation actually works. You know, dollar creation happens at the bank level, not at the Fed level. Real dollar creation. So we go into all that. I explain all that in there. So it's a lot of information, but if you're really interested in wanting to know, MW, check it out, man. It's free newsletter, free information in there. Let me see here. What's going on, Brian Riley? Good to see you. Wazobia, what's up, man? Good to see you here as well. Mark, take care, man. Let me see here. Let's see here. Let me see here. Hank says he's simply never going to base his primary strategy, market structure, on Elliott wave counts. So many other signs pointing to a longer range between 60 and 30, but I've shared those already last time. Yeah, we've already gone through that before. Let me see here. MW, you must be new, man. Hey, listen, yeah, great. Glad to have you checking in here. What's my overall opinion? Dollar up. This has been the same thing I talked about since last year. Dollar's been rallying since January of this year. You know, so right now, still looking for that same thing. I think legacy markets are very well overextended, you know, your stocks and whatever. So if they are not topped out at the moment, I think they will be pretty soon, sometime coming up here in the next few months. You know, so dollar continues to rise. And dollar, you know, it's not that the dollar rising causes stocks to drop or Bitcoin to drop or whatever. It's that when the dollar rises, it is signaling that the market itself is risk off, that the market itself is becoming risk off. That's what it's all about. Everything, I've been talking about this so much lately, everything is risk off or risk on. That's the best way to kind of think about the markets. And the dollar is just that visual about how people feel. You know, do people feel like the market is becoming risk off, or do they feel like it's still risk on? And so, you know, again, as the dollar rises, it's not that rise makes the other things fall. It's that it's just this representation of that overall mood, of that overall feeling of your market participants, right? So that's really kind of what you're getting there. As a matter of fact, let me see. I've got one more link here. Oh, let me find out here. And this is definitely a guy that you should be following here, guys, okay? Let me kind of put this out. He's one of my favorite follows here in in the financial world. This is Jeffrey Snyder. Okay, here's the link right here. And he comes to that same thing. He's got this article, right? He writes some of the best stuff, guys. You really need to watch it. Read his stuff. But he says we can't or shouldn't be blaming Omicron or non-money monetary policy. Instead, risk aversion is becoming the paramount setting across more and more markets. So it's all about that risk. That's what it's about. And so that's a great article right there. I would really suggest that you guys check it out. By the way, oil futures in contango for North Brent, not WTI yet, but North Brent is in contango, which means basically that they should continue to come down. And that kind of aligns with my count right now with oil, which has us topped out and working lower, right? So we've got that there. So, they're in contango there. WTI is probably going to, follow in with it pretty soon here, I would think. But nonetheless, definitely, I don't think that we'd be looking for, new all-time highs in oil anytime soon. Don't forget, I warned you guys that we had the New York Fed minutes on Wednesday. And so I talked about the idea that we were looking at the Fed probably speeding up their taper, doubling their taper, right, from 15 to 30 billion. That's exactly what they said they're going to do. So all things held equal, because we had that monster CPI number the previous week on the Friday. And so that's what they've done. They're doing it. Their plan is likely to finish taper by March. And now if you look at the dot plot chart, that has, the members looking at a likely 3 interest rate hike next year. Now, if you guys have been following me for the last year now, you know that a year ago I was already talking about this. I said, one, they would taper, and that that would get done before the end of this year. They would start tapering, and it did. I told you that they were adamant that they weren't going to raise interest rates until minimum 2024, probably later. I told you guys that I probably saw 2 to 3 rate hikes next year. I told you guys all this at the beginning of the year, right here, live. And that's exactly what's happening. So, maybe I just know a thing or two about trading, right? About the markets, about macroeconomics. Maybe. Anyway, it's good to see it, though, coming to fruition, because it means that a lot of the other stuff that I've been discussing is likely to follow through as well. Because here's the thing, guys. If your country is raising its interest rates, that makes your currency more valuable. And it's because you can loan out that currency at a higher interest rate, right? And so currencies, their value is determined by their currency versus another currency, right? Another country's currency. So all things held equal, if your country has a higher interest rate than another country, then the value of your currency should rise against that other currency. All things else held equal. So, again, that's where we're looking here. And as we know, we talk about the DXY, which is that weighted dollar value, right? So that's your Euro USD, your USD Yen, your USD Swissy, your USD CAD, your did I say USD Loonie? I think it's a USD CAD, whatever. Either way, same one. Your can't remember all the ones I listed yet. Your cable against the dollar. All those things come together in that weighted value of the DXY, right? So that dollar value. But the biggest one by far is the Euro USD, which is about 58% of the weighted value. So basically, it's the dollar value is going to be opposite that Euro USD, right? All intents and purposes. If you add in the USD Yen with that together, I think USD Yen's about 12 or 14%. So that gets you over 70% of the weighted value just between those two, right? But importantly, when we're talking about macroeconomics and we're talking about what's your central bank doing, we've got this commitment by the Fed here in the U.S. to normalize policy, right? To take down, to finish taper out, to raise interest rates likely, these things, right? The ECB we've got on the other side of that, who says, okay, well, we've got this thing we're doing, which we're lessening how much we're purchasing into the beginning of next year. But even after that, we're going to continue purchasing more, right? And so it's not really a taper like the U.S. is tapering. It's this idea that, as they've said, they're concerned about about what's going on with the economy or whatever, and they're concerned about tapering too soon, about stopping that easy money policy too soon. And so when you look at the dollar versus the euro, you have to look at that because you've got the U.S., which is very hawkish right now, and you got the ECB, which is looking pretty dang dovish, right, still. And so if that happens, that's just going to exacerbate that dollar strength. And again, that all becomes that whole risk aversion, risk tolerance kind of thing. So, let me see here. What's going on, Alan? Good to see you, man. Let me see here. So, yeah, my opinion overall, MW, is that the dollar continues to rally, which means the euro continues to drop. Stocks, are either topped or getting near there. Bitcoin, I still think Bitcoin has a higher high here. We haven't done anything significant enough yet to suggest it doesn't. But as I talked about earlier this year, we were looking at our normal cycle, which has Bitcoin topping out at the end of, or in December. And then a secondary idea, which is that it tops out again, probably around the end of Q2, the beginning of Q3. So right around summer. So at this point now, that secondary one is what I'm looking at. And we'll see what happens here. Obviously, if we do anything significant here to the downside, I'll be looking to change that if we get through certain levels. But for right now, nothing's happened that says, oh, yeah, that's coming in right now. So everybody's scared because they think it's a double top. It's pulled back, but this happens, if you guys ever watch LA Wave, right, and you get your wave 1, for instance, right, you'll get a wave 1, and then you get your wave 2, right? And then you'll get 5 up for wave 1 of 3. And that wave 1 of 3 usually ends around this previous resistance, right? A little bit below, a little bit above. And so this becomes 1, 2, and this becomes 1 of 1, 2, 3 here, right? So go 1, 2, 3, 4, 5. That gets you 3, 4, and then, 5 up here, right? So, people look at this right here, or they look at, wave 1 of 5 right here, same idea, right? And they say, oh my gosh, it's a double top. But this is what happens often. So, people are scared it's a double top. There's a lot going on. Bitcoin has fallen. People are scared. It is what it is. It's a lot of emotion going on out there. Okay? But we'll see what it is. We'll see how this turns out. Until then, we're playing local moves. We had a couple of great moves this week that are here recently that I've set up for Discord. So we had the low off here, which had this nice rally up here. Let me see here, and then I think we had this one right here. Oh no! It was this one right here, and then this one right here. Both. Going through our breakout, which signal was going higher toward these targets. So a lot of great trades available there to our members if they're patient and waiting for them there. Right now, we're kind of looking at this, okay? So we dipped down below this swing low here, as I told Discord. If we did that, that would suggest that maybe this is a WXY. And so you get it as an A, B, C. I guess I got to put this right here, right? There we go. A, B, C, and then you have for W, and then you have A, B, C as a flat here for X, and then you have an A, B, and we're working on a C here for Y, okay? It may be done, 65% retracement, almost on the nail, almost hit the nail on the head there, rallying strongly back up here. We broke out above the descending red resistance, but we're kind of trying to find support on it. We'll have to see how this plays out, but this is the first clue that maybe wave 2 is complete here. We really need to see locally a breakout, a nice impulsive breakout above this 15-minute pivot at around 48,209.5. We really kind of need to see that. And then, the next target is this 1 hour and 4 hour pivot up here at around 49,625. And of course, breaking out through this descending channel resistance should set us up then, signal that, okay, we're probably, getting through basically this 1 hour, 4 hour pivot, this descending resistance, this wave X up here, this area, getting through this will signal that wave 2 is complete here. Or, nothing's guaranteed, but that it is, it's going to add confidence to the idea that that's probably complete. And so right now, what do we have here right now? Right now we've got this, probably going to have to change this here. Let me see. We've got this, if the bottom's in, that's going to give us a minimum wave, parentheses 3 target up here. Just right around there, right around the 61. I'm just pulling this real quick here, so let me see here. Right around, I guess I'll just go ahead and move this down just a little bit here to around 61,250 or so. Kind of get in that area. But that would be that minimum expected wave 3 target there. I guess we can kind of look at this. If we get a breakout above this channel resistance here, this will give us a target of about $4,893 above the point of breakout based on the height here of the channel. As you can see, that kind of gets you around this wave circle 4 resistance, which is something we often look for. So we've got that there setting up as well. Let me turn this down here. Because what else I want to look at is on the larger... by the way, if we continue to break down here, we're still looking at this green zone down here at the right there on top of the S2 pivot on the 1 and 4 hour here. That's what we're still kind of looking for. It's basically from the EQ of this 1 hour demand structure, the EQ there to the S2 pivot, more or less around 4,400 to 44,750, that kind of area. By the way, you'll notice that'll also potentially hit the bottom of this descending channel here, right? The support there. So a good possible target if it continues down further. Let me just kind of pull this out of here. And we can jump into this larger time frame, guys. By the way, you'll notice your 15-minute here dipped into oversold, rallied back up. We haven't quite broken into overbought yet on the 15-minute Stochc RSI, so still room to go. What we're looking for is a nice impulsive breakout and close above this descending channel EQ. If we can get that, then pattern-wise, we would generally look for a target of that descending channel resistance. So different ways to look at this depending on how you want to trade, right? Your 4 hour, it shows us here dip down into oversold here for Stochc RSI. RSI itself printed a lower low in line with the lower low here. So no, what do you call it? No divergence there or anything. But this has that bigger picture, which is this larger descending wedge here and descending channel that I've been talking about. And so, again, we're looking for, as far as this count goes, what you need is a breakout above that wave X at 50,828 and 12 cents or whatever. We need a breakout above that to really kind of say, okay, that wave 2 is probably done. I'll break out of this descending resistance here. If this is legitimate as far as a wedge and a channel goes here, then it should break out impulsively and stay above. It may break out, come back and retest, but it shouldn't like play around the resistance there or drop below it. It should find support on it if it comes back to it. And that'll give you this pattern target here of 15,701 above the point of breakout. That's based on the height here, the widest part of the channel and the wedge here. What I like about the channel is still the same thing here. You've got this great EQ working as support along here. And that's really kind of great with that. In this area here, what we notice is we've got this large move down, large move up. Smaller move down, smaller move up. Smaller move down. So basically, you're getting a bit of a wedge kind of printing on here, right? And why is this? Why do I like this? Well, I like this because it suggests that demand is starting to take over. The demand's come in, it's starting to take over. And again, you look for that breakout there. If you want to do it this way with the wedge rather than the channel that I have on that smaller time frame, you can take the height of this wedge here, which is about $4,625 or so, above the point of breakout, and that should carry you then just above this other larger wedge here, so the breakout there. So you can definitely do that. If you're trying to look, okay, when do I get in? If you're not in yet, if I'm not in yet here, I'm looking for a definitive breakout above this 15-minute pivot area. which, as you can see here, almost aligns with this descending resistance. So I'm looking for an impulsive breakout. So larger, expanding volume, expanding candle spreads as it breaks through there. And I want to, preferably it'll come back and retest it and then head up. But I want to see that so that it doesn't fall back down below here. And that's probably my early warning that wave 2 may be complete. And so, of course, depending how you want to look at it, depending on what time frames you're using, you've got a lot of different levels there to watch. So you can kind of choose where you're comfortable entering. But just to make sure that whatever you choose, for whatever reason you choose, that your stop loss is appropriate. Okay? Again, if you're looking for a breakout above wave X because that signals that wave 2 is likely complete, then you don't go long on that breakout of wave X there and then put your stop loss right here below it. If you are entering the position, if you are entering on a breakout of wave X because you think this count is correct, necessarily your stop loss should be below wave 2 here. Because this is the structure that you're trading. If you do it any sooner, you can have wave 1 up. Again, wave 1 ends, subwave 1 of wave 3 here is going to end around this wave 1 resistance, right? A little bit above, a little bit below, something like that, right? Which means if you play the breakout of wave X, let's say it's from here, right? You play that breakout of wave X, you might get resistance here at this descending resistance, and then this pull back, and then the breakout. So if you enter on the breakout here and you have this really close stop loss because you're scared of losing money and you don't have your risk management correct, you're going to lose it right here because you'll likely get that pullback, whether it's there or down here, and that's going to hit your stop loss. If you're playing this structure, then a breakout above wave X means that your stop loss needs to be below wave 2. Okay? Now that doesn't mean you have to play that structure. You can play a shorter time frame kind of thing going on, right? But if that's what you're playing, then that is proper stop loss goes right there. Because if it breaks out above wave X but then drops down below wave 2, then your count is not correct here. Or, it could be a flat, right? Could be ABC down or WXY down, ABC or WXY up, and then 5 more down. But nonetheless, your wave 2 is not complete in either case. Okay? So you guys, it's not just about putting it where you want to put it because you're scared of losing money or something like that. It's all about, proper risk management, proper stop losses based on the reason that you're entering, especially if it's structure related. I think even Hank can agree with that. Let me see here. Kind of catch up with you guys. Let me kind of see here. What's up, Silvio? Good to see you here. This is possibly a 1-2-1-2, but again, this could potentially be maybe 5 up here, or 5 up here, and then this is so this becomes a 1 and a 2 here. Either way there. My first thing that'll get me thinking, okay, maybe there might be some sort of temporary top here, more so than what I'm thinking, is if we break down below wave 2 here. But again, even if we do that, it is possible this is 5 waves up here, and then we've got just this flat kind of thing going on. So we'll have to see. It's easier to get a 1-2-1-2 out of this in this way that I have it here than it is to try and get 3 waves up to the top here, which if you're running a flat here, this has to be 3 waves up to the top. Because you can't have this up here and then have a flat correction right here because it's going to stop. Well, it's not your flat, right? The flat, it's got to stop up here if this is A, B, and then C down. So it's the same thing we talk about, it seems like pretty much every time I'm on here now. Because people are scared and people think that, that price has to do something that they want it to do. But, again, guys, it's much easier if you just trade what the chart's doing rather than trying to anticipate. I see a lot of anticipation. What's going on there? I posted a tweet today, again, that reminds you that anticipation is gambling, right? Anticipation is gambling. Confirmations is speculation, right? So, for instance, you're looking for the breakout here. Speculation is to jump in before it breaks out because it's looking pretty strong here, or to buy the breakout. That's anticipation. That's gambling. If this breaks out, comes back, retests as support, and then breaks out above that swing high, that's a confirmation. That's your entry. Now, it still doesn't guarantee that, this is going to be the bottom. It's going to continue to fly up there. But confirmations make it much more likely that you're correct. Again, anybody that bought here because this was coming up strong and they bought before the breakout, or they bought the breakout, are worried right now. They're stressed out right now because it's pulled back into this line. I don't like to see this. I don't like to see this. I want to see a clean break, and I want to see that line hold as resistance. Most of the time, if it does not, it's because price, that's not the line that you're looking for. That's not the resistance that signals, hey, the bottom's probably in. Most of the time. And so, again, the way I trade is I'm looking for confirmations. I don't normally buy breakouts. Okay? But think about what most people do, what y'all probably do, right? You buy the breakout, right? You're fearful of missing that opportunity, or you want to get in and maximize your rally, right? Or you're scared it's not going to come back and give you a chance to enter again. It's all emotion. All those answers, all those reasons are emotion. But when you learn how to trade properly and you learn about proper risk management, that stuff goes to the wayside. And you'll know that because you won't be as stressed out about it. You're not so concerned about it. If you find yourself always worried about losing money, if you find yourself always worried about your stop loss, if you find yourself always worried about whatever in your trade, rather than just putting your trade and letting it be, that's a good sign that you're very emotional, which means that you probably aren't understanding what you should be looking for, what you should be looking. You're just kind of putting in because you got a feeling, because you're FOMOing in, you're scared, right? Scared of missing out. But again, guys, when you do that, it's all about anticipation versus confirmations, right? So what I do with Discord is I give them these, listen, if it breaks through here, there's the first clue that maybe the bottom might be in, but we're looking for this further breakout to kind of add some confidence to that, right? So this descending red resistance, first clue, maybe, wave 2 may be in, but we really need to see an impulsive breakout above that 15-minute pivot at least for locally to say maybe this is done here. We don't have that. Instead, we get this pullback here, right? So if you get the breakout and it retests the resistance as support and then breaks back above that swing high, that's a good clue to go ahead and go long, right? Or if you get this and then you wait for the breakout above 15-minute, you've got more chance that you're going to be correct if it's impulsive. We're not just looking for something like this right here where it just kind of hovers around the pivot. We're looking for it to break out and stay out and continue up, right? So it doesn't come back down. There's a lot of goofing off, as you can see here around. Let me kind of get this changed to a different time frame here. Get that off there so you can actually see the 15-minute pivot. Let me see here. Yeah. So oh man, did I just move the 1 hour there? No, it's a 15-minute. Okay. Yeah. So when you jump over here, that 15-minute pivot's right here, right? So we came in sideways between the pivot of the S1, kind of pushed up, rejected around the pivot, bounced at the S1, dropped down to the S2. Now we're coming back up. I mean, for all intents and purposes right now, we're just, the support resistance right here is where we hit and we got rejected. Now we're going to, you want to see some rally up through that now. Until it does, you still could see this coming down here toward that target area. So if you guys are not employing confirmations, I really think you need to. Just in general, that's nothing specific about any of y'all specifically. That's just general trading. Yes, occasionally you're going to miss the one that fires off and doesn't retest. It happens sometimes. Of course, if you're in tier 3 with us, every week you're finding a new strategy on how to enter that, right? But even if you don't do that, just at the end of a year or 2 years or 5 years or whatever, man, if you're constantly waiting for confirmations rather than jumping in and anticipating, you're going to have a lot less losses and potentially a lot more growth in your capital account. Just because you're not going to be constantly taking the poor trades, the ones that break out and then, fall back, because they're not those significant areas of resistance that you're looking for to confirm that you're reversing off whatever you're reversing off of. Okay. Hey Sylvia, glad to see that, man. Yeah, that this past week's strategy was definitely one of my favorites as well. It makes it so simple to understand where to enter and where to exit. It really does. So yeah, glad that worked for you. Hank says totally. What I was saying earlier, said even Hank can probably agree. He says totally. People lose more money with badly placed stop losses than anything else. And a lot of that, again, that's because y'all aren't understanding proper risk management. And that includes where your stop loss goes. Remember, what I can almost guarantee that with most of y'all, what happens is you find somewhere that you want to enter, and then you enter in with whatever size position you're going to enter in, and then you figure out where your stop loss is and whatnot. The problem is you don't know if you're trading, if you have proper risk management that way, because the odds are you're probably entering with too large a position size. But again, it's this idea that, as a trader here, you want to get from 100, maybe you've got a small account, $100, $1,000, right? And you want to turn that into 100,000 or a million or whatever as soon as possible, right? So you're jumping in with anticipation. You're not waiting for confirmations. You're trying to get there tomorrow rather than just, if you do what needs to be done, it follows, okay? But if you try to ignore what needs to be done just so you can get there faster, you're likely going to lose all your money. We see a lot of people online, we've talked about this before, guys. A lot of people, they get online there in crypto Twitter and they say, oh yeah, look at all this money I made. Well, if you guys have been around for any length of time, often they're found to be photoshopping, right? Their returns there. So that's the first thing. But the second thing is, these are like, one or two people, even if they do have a good trade, it's one or two people out of, millions, right? But yet we, as human beings, psychologically, emotionally, we tend to concentrate on those single people rather than recognize the fact that it's only a couple people. And then we start thinking, well, I need to be doing that as well. Third thing is, we don't know what their history of trading looks like, to be honest, right? So maybe they got one good trade, but they've got a series of large losses, right? And so they're really down overall, significantly. Other things you guys don't know, right? But this is the reality of what you're facing on there. Which is why I don't care a lot about posting my positions, because, again, I could do that, right? Now, you guys know that usually when I'm posting it for weeks and weeks and weeks or months at a time, multiple times a week, and continuing to show you whether I'm winning or losing, right? But that's why I do that, so that you understand I'm not trying to just Photoshop something or make you believe this nonsense that says you're going to get rich overnight, okay? Trading is a skill, guys. Think of it as a job, right? And in your job, you don't get from, entry level to management overnight, right? It takes time of doing your job correctly to get up there. It's the same thing with trading, guys. It takes time of trading correctly to get your wealth up there where you guys want it. As long as you can get that through your head, though, you've got so much more of a chance of being successful as a trader. As long as you continue to ignore that, you're going to find a tough time to trade, guys. And you might fall into the whole thing of, it's the whale's fault or Wall Street's fault. They're stealing money from me. Guys, I've been doing this for a quarter of a century, and I'm going to tell you right now, the reason you're losing money is because of you, not because of anybody else. Oh, well, I paid this guy to give me trade, to tell me when to buy or sell. Well, that's on you. Even if their system works for them, there's no guarantee it's going to work for you, because, they've gotten to this point, potentially, if they've got this system, where they understand proper risk management and whatnot that they're doing, right? And the odds are, if you're new to trading, you don't know all that. You don't know when to change your mind. You don't know when something looks good starts looking bad. You don't know where to properly place your stop losses, or, if you need to change things up in the trade, depending on whatever that system is. So even if they're doing all right, the odds that you're going to do at least as well are pretty small. The one thing I've been trying to show you guys over the last 3-4 years now is that trading is about you. And what somebody does is likely not to work exactly for you. You have to get in there. You have to learn the basics. You have to understand why and how price moves the way it does. You have to learn how to properly use your risk management, how to properly do risk management. And that way, you can develop a system that works for you. I'm going to tell you guys, honestly, trading is not about a single trade, though that's what crypto Twitter would have you believe. It's all about that one trade, right? It's not. It's about a system. And as long as you get a system that works consistently, which means it doesn't mean you're going to win every time. You're going to lose sometimes. But it means that at the end of the day, a year or whatever, you're going to make more money than you're going to lose. So you're consistently profitable. And then just employing that system over and over and over again. That's what trading's about, guys. It's not about the one trade. But again, when you first come into trading, it's all emotional, and the one trade is all that matters, right? I hope this is hitting home with you guys. I really do. I really do. Whether you join us or not, me telling you the realities right here, it doesn't enrich me, monetarily in any way. Okay, so don't try to think, I'm just telling you this just because, I'm trying to make money or whatever. Whether you join us or not, what I'm saying remains true. It remains valid. Okay? So that's where we are there. What's going on, Stuart, man? Good to see you checking in, buddy. Let's see here. Let's see. Yeah, exactly, Hank. You have to, before you enter a trade, you should already understand where your stop loss is, because like I said, understanding where your stop loss is helps you figure out how large a position you can use. If you're figuring out your position size first instead of last, you're doing it wrong, guys. You're doing it wrong. And you're going to lose a lot more money than you'll ever make. Okay? Again, guys, I'm telling you, the biggest obstacle you face as a trader is yourself. That's it. It really is. It's your refusal to do the things that you need to do to get to where you need to get. It's your refusal to be patient. It's your refusal to look for confirmations. It's your refusal to learn proper risk management and to apply it properly. Apply proper risk management properly, huh? But you see what I'm saying here, right? It's on you guys. But, again, with society, especially today, it seems like we're told over and over again, we don't have to take responsibility for anything. Well, how much sense does that make? As long as you continue to not take responsibility for the poor choices that you make, you're going to continue to make them. You can't move on. You can't better yourself. And your life should be all about bettering yourself in everything, not just trading, guys, in everything. If you're stagnant, if you think that you don't need to make yourself any better, man, life is going to be boring for you. It's going to be full of a lot less opportunity. It's when you're constantly reflecting and constantly bettering yourself that you see that opportunity, guys. Okay? Let me see here. Kimo, what's up, man? You tune every week thinking we were going to look at some charts, but then end up getting much, much more in terms of psychology. Appreciate it. Thanks, man. Really, that's what it's all about, guys. I say these and I repeat these things often, and I talk about it from different angles, because the real reason that you fail as traders is not because of what's going on there. It's because of what's going on here. That's it, guys. I've said it before. These large trading desks, these banks and whatnot, they employ and they pay a lot of money for basically trading psychologists. Okay, they're people who have usually PhDs in psychology, and they have vast experience with what's going on emotionally with you when you're trading and psychologically, and how we act and react with these things just normally, as well as traders. And they employ these people for their traders. If you watch Billions, right? If you watch Billions, what's her name? Wendy Rhodes. That's what I'm talking about. That's the kind of person that you see in a lot of these large trading desks. And their job is to get the trader's mind right. Now, it may not be exactly like she does it there, but the reality is to get your mind straight. The rest of this can all be learned easily. This can all be fixed easily. This is the thing that takes time and effort and often needs to be reminded. Okay? Shilling me to everyone instead of Bitcoin. Yeah, behavioral scientist types. Exactly, Hank. Yeah. Every day we got these idiots with this nonsense. Let me get rid of them there. Let me see here. Yeah, man. It's almost like we're saying the same thing, Hank. We can't do that. We got to change, right? Ali, exactly. Trading is a marathon, not a sprint. Exactly. But you guys see, I'm a firm believer in that. And, 25 years of doing this should be, support for that, that reasoning there. But, as new traders, think about it. You're usually the opposite, right? You think about how quickly can you make all that money. You think of it in terms of a sprint, in terms of one trade, rather than a system that makes you money consistently, right? So, yeah. Let me see here. So that's what we're looking at here, guys. Let me see here. So the DXY, man, look at that nice rally coming up off this possible wave 2 here. I've got maybe... There's a lot of overlap here, so it leaves some different interpretations here. But for now, I've got this as a 1-2, 1-2. Let me see here. I think we stopped just above that. And then, so as of wave parentheses 3, we've got 1, 2, working on that 3, which has a minimum expected target up there of 97.562. Now, again, you think, okay, well, how's the dollar going to do that? Well, again, the Fed has doubled the taper, right? So that's dollar bullish because it means the Fed is closing up its spigot, right? It's purchasing mortgage-backed securities and whatnot. So, hey. It also means that they're probably getting ready. Again, if we look at the dot plot chart there, we've got, the median agreement is that we'll probably have 3 short-term interest rate hikes throughout next year, which is huge because in September, guys, I think it was September, I think they maybe had one interest rate hike for 2023, I think is what it was. And now we're looking at 3, right? And so that, again, interest rate hikes are at the Fed here are going to be bullish for the dollar. And then as the dollar continues to rise, again, people that are paying debt denominated in, U.S. debt, they have to, by law, they are required to pay in U.S. dollars. So when you're a foreign country or a large foreign company or something, you've got to trade your currency for dollars to pay the debt. And as the value of the dollar rises, your debt becomes more expensive. Remember, guys, the U.S. and pretty much every country now are debt-based economies, which means that you have to have inflation. It works as long as the value of your currency continues to drop, right? It becomes dangerous when it stagnates as long as your currency continues to rise. The value of it continues to drop. It becomes, if the value of your currency becomes stagnant or rises, it makes that debt more expensive. And more expensive debt means less people borrowing. And less people borrowing mean less dollars going to work in the economy, buying stuff, expanding operations, stuff like that. And that's how this all kind of comes together, just in a real, glossed over kind of way. So we're looking at what the Fed's doing here. And you say, but the Fed can't do these things. This is what I've heard over the last few months, pretty much most of this year. Fed can't do that. It's going to cause the economy to die. It's going to cause the economy to roll off the... Guys, the Fed, as I said, has been painting itself into a corner. It has no choice. It has to, because it can't continue to allow prices to rise like they've been. Now, part of it they can't do anything about. Part of it, a significant part of it is the fact that we've got all these cargo containers, these cargo ships lined up off the coast of California, trying to get into the port there in LA, right? Now, speaking of that, real quick here, there was something recently. I saw a news event recently where they said, "Oh, well, look, it's coming down. The number of what do they call the container ships parked right off the port has dropped, so it's working." Well, no, that's disingenuous, because they've told them now that they have to park further off the coast. I think like up to like 150 miles or 100 miles or something. And so when they're saying how many container ships are sitting there waiting to get in the port, they look within 20 or 30 miles off the coast. So it's not that there's less, there's just less in that area, but that's because they force the other ones to go out further. So they're being really disingenuous, and it continues to back up even more there. They've got all those empty chassis and containers sitting there at the port, which means they can't be used, right? Because the trucking companies aren't getting them because they're lacking truck drivers. I mean, it's a huge thing. So you've got the delivery bottlenecks. You've got production bottlenecks still too. And then on top of that, you've got a little bit of extra money kind of running around the economy as well. Only thing the Fed can deal with is that extra money running around the economy, right? But they can't do anything about that other part, which is the significant thing of what's going on. The only way they can affect that maybe is to make it difficult for people to get more money through loans or whatever, so that there's less money chasing after those goods which are currently backlogged and whatnot, right? So I guess they can kind of outside in, affect it in that way, but they can't do anything to lessen the congestion at the ports itself, other than, to make it so that people buy less stuff by decreasing the amount of money that's going out there. So decreasing the ability of people to get loans, make it more expensive, right? So that's kind of where we're at, guys, as we do that. Let's see here. Niels, what's up, man? Good to see you checking in. Let's see here. J Devo 10, what's up, man? He says, tuning in for the first time and so glad I did. Thanks for sharing the knowledge. Mr. Melker sent you. Oh, man, I love it. Thank you. I'm glad you came in, man. Again, a lot of what I talk about here is not appreciated by new traders, because again, they're looking at that other mindset, the get rich quick kind of thing. And I never talk about that here. I talk about the opposite. I talk about the realities of being a trader. I don't tell you what you want to hear so that you buy stuff from me. My goal here is that if you're here, it's to make sure you truly understand what it means to trade. And what it means to be a trader, a successful trader over time, which is most often completely 180 degrees from what you think it is when you first come in as a trader. So, if you guys are getting that from here, my job's done. We'd love to have you with us at howtotradeTowin.com, even just for a month. Soak up as much as possible, but whether you do or don't, I'm still going to be here doing this, right? Because I want to help you hopefully see things in a better way. I hate the idea. Here's the thing, guys. I've been through a few market crashes, right? I've been through, as a participant, through the dot-com bubble, through the GFC, and so I've been through these as these things are happening. And the worst thing that happens is at the top, when you think that it can't possibly go down and things are going to continue going up, and then you end up losing everything because it goes down and it keeps going down. And you thought it was going to go up. And now you don't get out. And you keep riding it down. And then you lose everything. This happens to so many people at the tops of markets. And it's just awful, man. Because there's no reason for it. Other than just being emotional and not choosing to learn how to really trade. Everybody is an expert in a bull market, right? Everybody's an expert in the bull market. Because the price just goes up. It's when it stops, when the music stops, right? When all the chairs are pulled away. That's when you get the big problems. So if I can help just one or two people with what I do here every week, then man, that's something at least. Something at least. Let's see here. When you first started a year ago, my videos helped you a lot and inspired you to learn and not just follow those moon boys. Man, I'm glad to hear that. I'm glad to hear that. Because again, guys, nobody really knows where these things end and where they begin, right? it's always hindsight, right? Sometimes we can get close, but most of the time it's just hindsight, right? And so even if you think it's going to end at a certain point, it's okay to continue trading that trend while that trend exists. But there's the difference. You have to know that it's potentially going to end. And most new traders, when they come in, they never understand that. They think it's going to continue up. They wait forever to finally get in. I myself have friends who are not financially literate. They don't trade, do these things. And they're asking me now, man, should I be more aggressive with my 401k? So I said, what? I can't tell you personally what to do, but I'm going to tell you what right now, as far as the market goes, I don't think this is the time to be aggressive. Time to be aggressive was a year ago. Can you still trade a little bit? Sure, you can trade it, but if you're just looking to be more aggressive with your investments at the moment, I think that's setting up for a really bad situation. Because, if we do this thing that we're looking at and we get this big, potential depression, even if it's just a recession, you're going to see a lot of companies going under, right? So a lot of companies have been held up, that we call them zombie companies. They're only around because people believe the Fed's going to continue to bail them out, right? It's going to continue to buy their corporate debt. Well, we know now they're not going to, right? So these companies aren't making their money. What they're reaching here is not what they expected, is not because of what they're doing, because of what they're doing so great. It's just because of this ancillary thing, right? And when that stops, what happens? So then they go out of business, people lose jobs, even companies that are doing well, everything's going to slow down. They're going to have to lay people off. They're going to have to hire less people. We've had this great resignation where people are leaving because they believe they can get a job, no problem, right? And then they find out, oh God, no, I can't now. I've got to compete. And I've got to compete for lesser positions now, lesser available positions. And so you see them losing money with their stocks and with, their cryptos or whatever, with their metals and all that. You see that their opportunity to make more money, working is diminishing, and it just becomes this big, huge, really awful thing. And at the end of the day, you want to be positioned so that you don't get caught up in that. Okay? Seriously. Well, Zobia says, Michael Saylor's floating the idea that they want to lend out their BTC. What's your take? Well, I haven't seen that, so I don't know exactly what he said. But, if you've got Bitcoin sitting there and you plan to hold it for a while and you can loan it out and make interest on it, yeah, that's what you do. Worst case scenario is that the person can't pay it back, but you're over collateralized with your Bitcoin. That's the way all these things work. You're over collateralized with your Bitcoin. And so you can sell it, or you've got an automated system that sells it if they don't make their payment or whatever. And so, you still have your money. You still have your cash, right? Oh, that's if they're loaning out. I'm sorry. No. I'm thinking about if people are loaning their own Bitcoin out. Or taking a loan out against their own Bitcoin. I'm sorry. If he's loaning it out, then, as long as the market's going up, as long as the people that you get, that you loan it out to can afford to pay it, then it's good. The problem is, do you loan out all this, Bitcoin tops and crashes, people can't pay it back, then what? Then you're SOL, right? Because they've lost their Bitcoin, your Bitcoin. They can't pay you back. You lost Bitcoin. You lost your interest payments and your primary payments, everything, and you're out. So, as long as the market continues to go up, it's an okay thing. When the market reverses, though, I'm not so sure lending out your Bitcoin is where you want to be when that happens. Yeah. Let's see here. Kimo, you said you remember when you were early in trading, listening to me back in 2018 when I first started on YouTube? It says, I used to be so aggravated until I understood. I do. I tend to aggravate people because I don't tell them what they want to hear. I don't blow smoke up your rear end, I tell you what you need to hear. And that's kind of where we get with that. Now, the other possibility, what may be going on here is, I don't know, maybe we've got a triangle for wave 4 here. So maybe we've got A, B, C here. So here's A. B, C there's B. Maybe this is C, maybe this is D. We pull back for E, and then we'll get a fifth wave up. By the way, that's the, I'm sorry, I didn't mean to wait so long to tell you that. But that's the other one here, and that's because on my Euro USD chart, I've got that as a triangle right now, as a wave 4 triangle, with one more leg lower coming. So this might be as well a triangle forming here on the DXY with one more rally up. But again, that would have to be something like A, B, again, maybe C right here, D, and then we'll get maybe like an E. So we get this kind of, oops. So we get this kind of triangle thing going on here. And then if that's the case, then you'll have a pattern target here based on the height here. Yeah, right around 1.419 or so above the point of, well, above wave E. And so wave E, is likely to kind of come right in this area here, I'm thinking. Which then still gives you that same target area up there of around 97.5, 97.6 almost up there to finish it. So that is a possible, what may be going with all this sideways as well. As I mentioned earlier, it's kind of iffy on the count here because it's all this overlap. So very well might be what's going on there. And again, I've basically got that on my Euro USD chart that I update a couple of times a day there with Discord. So, yeah. So we're looking there. Let me see here. Let me see. But let me see. I need to get out of here, guys. I'm over. I'm trying to do this shorter format here. Let me see real quick here. What can I pull up here as far as charts go? Let's see. We can look here at what's going on with the NASDAQ composite here. Let's see here. So we've got this breakdown today. It's right above the wave B support here at 14,931.61. If we break down below that, that should add confidence to the idea that we've got a 1, 2, and 3 coming down here with a minimum expected target of 13,742. Yeah, it was the S&P that broke out. Like I said, we didn't get this rally up here to a new high for the NASDAQ composite. But again, for the S&P E-minis here, we did. Now, here's the thing. We got this slightly higher high here. And now with that, we've got this dip down below here. Now, I've got this initial wave C of 2 target here right around the S1 pivot at the 61.8, and that's kind of where we're at. And so this may be an A, B, and a C here. Okay? So if we break out above the swing high, that says, okay, we've probably got a 1, 2, we'll get a 3, 4, and 5 going up to finish 5. If, however, this count is correct here, and we've got 5 waves up to a new all-time high just barely, as you can see here, this is possible. This could be. It's done enough. If this is 5 waves up that breaks above this previous high, then it's done enough. It could be a very, very short wave 5. And so what we're looking for is a breakdown below the swing low here at wave 4, wave circle 4, which is right around 44.92. If we break down below that, that says we've got an extremely short wave 5 here, likely. Heading down. Now, my only other thought there is maybe we got a flat going there. Maybe we got an ABC, and then we'll have 5 down below, and then we'll rally back up. But we'll face that when it comes right now, okay? But for right now, we're looking at maybe ABC done here, and we'll see if we can get that rally back up and out from there. But it is, again, the higher high here. Again, going to the Dow, no higher high there. We came up near, but not quite at that top there. Potentially ABC done here. We broke it down below wave B. So if the count is correct, then we should be looking for wave circle 3, minimum target here at 31,861.50. But we definitely want to see some more impulsive breakdown below that pivot. But, that pivot, it's a 1-hour pivot. It's gone at the end of today. We get a new pivot next week. But right now we've filled in this gap here, so we'll see. We're kind of bunching up here. The 1 hour dipped in, reset into oversold, trying to break back out. But that could be temporary. We could just see this, gathering more force to head on down lower here. So we'll have to see how that plays out. Breakout above wave 2 says, like the S&P, this may end up being wave 4 down here. And we've got wave 5 in progress. If we're dropping down below wave circle 1 over here, though, at around 34,006 on the points there, 0.98, that would, increase the odds significantly that if wave 5 is done here and this is a 1-2 heading down for 3. By the way, if this is wave 3, we should expect to see, during this, we should see stronger movement down than what we saw here on wave 1. And so usually that'll happen on a breakdown below wave 1. At that point, this comes back, everybody's like, oh, it's a dead cat, it's gonna just bounce here and head back up. And they go, oh yeah, see, I told you, it's just rallying. It was just a dip, and it's coming back up. But when it breaks down below that swing low, then they go, oh God, no, it's going lower now, and I should have already been out. And that's why then on wave 3s you usually have that extensive push down, that harder push down. So yeah, let me see here. Let's see. Inflation question: having successive high CPI prints lately, would they take a few quarters to reverse, or is it possible to be more immediate, thinking it is a large market? No, I think it's going to take a bit to come down. I think, inflation stays, or higher prices stay around for a while. For at least into maybe mid-year next year at least. Potentially the end of next year. Now, that doesn't mean they continue to increase, but they stay elevated. There's no significant move down until sometime next year, I think. Yeah. It's going to take a while for, Fed policy to play out. Matter of fact, if you watched on Wednesday, Powell's comments there, Steve Leisman over there at CNBC, I think he was asking him that same question, if I remember correctly. He asked him about, the idea, why are you guys doing this now when it's going to take a while to come down, And so, yeah, that's generally the idea, is that it's going to take a few quarters to really kind of reverse, come down strongly, or, stronger, to look more like it's serious about coming down. Anyway, guys, listen, I'm over here, so I'm going to get out of here. I appreciate you guys joining in as always. If you'd like to, do this on a daily basis and so much more, man, we've got more information than you're going to be able to soak up, in a few months, much less a month. But you can join us for a month and you can get a significantly better understanding of the markets and how to trade them possibly, and some good strategies to trade them as well. Just being with us for a month. So we'd love to have you there. Join us at howtotradetowin.com. All right. Other than that, if you're Discord, I'll see you guys over there here in a bit. If you're not, I guess I'll see you guys then next Tuesday, right? 11 a.m. Central Standard Time. I hope you guys have a safe weekend. Trade safe. Like I said, guys, it's all about the difference between anticipation and confirmations, right? Anticipations is gambling. Confirmations is speculation. If you're trading, you should want to be a speculator, not a gambler. All right? All right, guys, remember, the only thing you control in the market is how much you lose. So keep working on that risk management, and I will see y'all later. Take care.